Hey guys, Breezy CPA here, your certified public accountant, back with another video. In this video, I want to dive into a topic that can potentially have a huge effect on the financial markets in the future and potentially open the door to massive financial fraud like we saw with Enron and WorldCom. This topic hasn't been talked about a lot and it's kind of been kept in the background and it's being kind of purposely hidden and swept under the rug from the general public. And as a CPA and as an auditor, it hasn't received the attention that I think it should. So I wanted to shed some light on this subject, whether you're an investor, whether you're an accountant, or just an ordinary taxpayer with a 401k, you should be aware of what is going on in relation to this topic. So let's start with the basics. This video is going to be looking at the SEC and the Public Company Accounting Oversight Board. So starting with the basics, if you don't know what the Public Company Accounting Oversight Board is, which a lot of people don't, basically the Public Company Accounting Oversight Board is responsible for the oversight when it comes to the audits of publicly traded companies. So taking a look at this little diagram that I have here, we have publicly traded companies in the market, right? So these include companies like your Disneys, your Teslas, your Coca-Colas. And these companies, they generate financial statements, right? Which they need to present on a quarterly basis and a yearly basis to their shareholders. Now, these companies, they issue stocks and bonds, right? Now, if you issue stocks and bonds, you need to register that with the SEC. So all these companies need to register their publicly traded stocks and bonds with the SEC. Now, the SEC oversees the Public Company Accounting Oversight Board. So the Public Company Accounting Oversight Board, they oversee audit firms when it comes to registration, inspection, standard setting, and enforcement of auditing rules. So the SEC approves the Public Company Accounting Oversight rules and standards. And basically, the Public Company Accounting Oversight Board was institutionalized in order to protect the public interests, basically to protect the investors from situations like we saw with the catastrophic impacts that happened with Enron and WorldCom, for example. So audit firms need to register with the Public Company Accounting Oversight Board in order to audit these publicly traded companies. And then the Public Company Accounting Oversight Board oversees those auditing firms to make sure that they're doing what is necessary in order to ensure that the financials of these publicly traded companies are presented accurately. So this was created by what was known as the Sarbanes-Oxley Act of 2002. And this basically required yearly audits of the financial statements and internal controls of publicly traded companies to ensure that everything was accurate. So what does this mean? This means that SOC required GAAP financial statements. So that includes your balance sheets, your income statements, statements of comprehensive income, statement of cash flow, and statement of equity. So all the financial statements that these publicly traded companies need to compile in order to present all the information necessary for investors to make appropriate decisions when it comes to investing in these companies. Then what happens is an auditor or an auditing firm comes in and they audit those financial statements of these publicly traded companies. So the auditor and the auditing firm, they're going to test the internal controls of these companies, make sure that they're operating effectively, and that management has followed generally accepted accounting principles when presenting their financial statements. And then what happens is this auditing firm is then going to issue a report saying, yes, we agree that this company accurately reported their financials. And basically that is going to give credibility to the investors in the market that what the company is presenting is accurate, because we couldn't just take a corporation's word for how much they had in sales, how much they had in revenue, right? I mean, corporations are probably going to lie to us. So basically, you need these auditing firms to come in and verify those numbers. And then who verifies the auditing firms? Or that's where the Public Company Accounting Oversight Board comes in. Now, what is the issue that we are going to be discussing in this video? Basically, they want to dismantle the Public Company Accounting Oversight Board, and they want to fold it into the SEC. So the SEC already oversees the Public Company Accounting Oversight Board, but the Public Company Accounting Oversight Board operates independently of the SEC. The Public Company Accounting Oversight Board is funded by fees that they charge to these publicly traded companies and auditing firms on a yearly basis, right? So they're funded by the publicly traded companies and the auditing firms, and the SEC oversees the Public Company Accounting Oversight Board, but the board operates independently of the SEC. And what they want to do now is they want to dismantle the Public Company Accounting Oversight Board and fold it into the SEC. So what are the implications of this type of action? Before we dive deeper into this subject, I just want to say thank you to all the new subscribers. If you haven't subscribed to the channel already, please make sure to hit that subscribe button for future videos. Thank you to all the new students who have signed up for breezycpa.com. If you're interested in learning more about accounting, or you're on your CPA journey to getting your certified public accounting license, please make sure to visit breezycpa.com. We offer courses for all of the CPA exam sections, and if you use promo code Breezy20, you'll get 20% off your order at checkout. The link will be in the description box below. So diving deeper into this subject here, this article from the New York Times, "We exposed fraud at Enron and WorldCom. Don't let history repeat itself." So this article does a great job of breaking down basically what is going on here with the SEC and the Public Company Accounting Oversight Board. More than 2 decades ago, we blew the whistle at Enron and WorldCom, industry giants whose spectacular falls revealed 2 of the largest accounting frauds in American history. So we know the destruction that fraud causes. These were major issues back in the early 2000s, and people lost billions of dollars as a result of the fall of just these 2 companies. We lived through it. We witnessed how unchecked power, collusion at the highest levels, and manipulated financial statements can bring down iconic companies, destabilizing markets, and vaporizing billions of dollars and thousands of jobs overnight. So when I say that this can impact everybody, you don't necessarily need to be an investor. You don't need to be an accountant. You could just be somebody who's working for one of these major corporations, and overnight that corporation disappears because they were involved in some type of major financial fraud. And that's why the Public Company Accounting Oversight Board is so vital in ensuring the investors' confidence in these companies and making sure that they are doing everything appropriately, so that, billions of dollars aren't lost in 401ks and stocks, and people's jobs don't just disappear because a company ends up going bankrupt because of one of these major financial frauds. So that's why we are raising our voice now against a proposal by the Republican lawmakers to eliminate the Public Company Accounting Oversight Board, a watchdog that Congress created in the wake of those scandals to protect against accounting fraud and audit failure. The rollback of this hard-won safeguard would unleash additional risk into a highly uncertain economic environment and make the next corporate disaster more likely. So this is basically something that was implemented 20 years ago. It has only done good in ensuring that the financials of these companies are appropriately represented. And now they're basically saying we want to remove this safeguard of the general public. And the question is why? So the collapse of Enron and WorldCom exposed a broken system for verifying financial honesty. Before the Public Company Accounting Oversight Board, accounting firms essentially policed themselves. So the accounting firms were based on ethics, and basically, we believed that the accounting firms were going to do the right thing when auditing these companies. The system failed in part because they often earned far more money selling advice to the same clients than they did from auditing those clients. So that's why we needed the Public Company Accounting Oversight Board. As a result, firms were sometimes incentivized to go easy on the audit side, maybe, turning a blind eye to certain things that a corporation was doing because they were getting paid by those corporations, by reducing testing, lowering standards, or putting more junior staff members on complex audits, for example, to secure their more lucrative consulting businesses. This conflict of interest, combined with auditing methods of the time that were strong enough to uncover elaborate high-level fraud schemes, created an environment that allowed enormous deceptions to go unnoticed. So this is the worrying thing. We created the Public Company Accounting Oversight Board in order to ensure that these deceptions were uncovered, right? And now all of a sudden, the government is saying, okay, we want to remove the Public Company Accounting Oversight Board. So from my perspective, I don't know about your perspective, but it basically seems like, okay, we kind of want to let some of this stuff that has been getting noticed by the Public Company Accounting Oversight Board, we want to kind of be able to do it without somebody looking over our shoulder. At their peak, Enron and WorldCom employed more than 100,000 people combined and operated in over 40 countries. So these were major corporations if you weren't around for the Enron scandal and the WorldCom scandals. Enron pioneering the trading of energy derivatives, reinvented the natural gas industry, and earned Fortune magazine's title of America's most innovative company for 6 consecutive years. So this was a company that was touted by major magazines like Fortune magazine as America's most innovative company for 6 years consecutively. WorldCom was a dominant player in the internet infrastructure and telecom leader that reshaped the industry, once boosting the largest acquisition in corporate history and the 5th most widely held stock. So the 5th most widely held stock on the stock market was WorldCom at one point. So we're talking about major players, the Teslas, the Disneys, the Apples. These companies were right up there with them, and they committed financial fraud. Both had powerful chief executives and celebrated chief financial officers who were beloved by Wall Street. So they had a tremendous reputation. Nobody ever thought in their right mind that these companies were committing fraud. Their cost of their deceit was staggering. More than 50,000 employees lost their jobs, and the companies entered bankruptcy, leaving investors and creditors with catastrophic losses. At the time, these were the largest bankruptcies and civil settlements in corporate history. So, the largest in corporate history. In response to these and other failures, Congress came together in 2002 to pass the Sarbanes-Oxley Act, which we talked about, which created a strong framework to deter and detect fraud. The Public Company Accounting Oversight Board was a cornerstone of that reform. So it created the Public Company Accounting Oversight Board, an independent, nonprofit, non-governmental regulator charged with overseeing the public company audits and restoring trust in financial reporting. The bill enjoyed overwhelming bipartisan support and passed almost unanimously in the House, 423 to 3 votes, and in the Senate, 99 to 0. So this was incredibly supported by both the House and the Senate when it came up for voting, almost unanimously being voted as a result of these major corporate financial losses that had taken place. The Accounting Oversight Board ushered in rigorous inspections, enhanced enforcement, and improvements in audit quality that the profession badly needed. Successive Securities and Exchange Commission chairs from both parties have affirmed the board's value as a vital post-crisis innovation. Thanks to its work, the audits today are more consistent, they're more credible, more accountable, helping to uncover deficiencies that might otherwise fester. The board's continued vigilance is crucial, as many of the systematic risks that necessitated its creation, such as the inherent conflicted relationship between auditors and their clients and the temptation of fraud. So these still endure. Every organization has room to improve, but any needed changes can be addressed with the current framework. Instead, as part of its broader federal budget reconciliation bill, the House has advanced a measure, so we're talking about present day, the House has advanced a measure to eliminate the board and shift its responsibilities to the SEC. And that might sound like a bureaucratic tweak, but it isn't. Independent from the SEC is one of the board's greatest strengths. So the fact that this board is overseen by the SEC, but it's independent of the SEC, is the greatest strength of the Public Company Accounting Oversight Board. The SEC does oversee it, approving its budget and appointing members, but the two work separately in complementary ways in order to protect investors. While the SEC has a sprawling agenda regulating public companies that sell investments such as stocks and bonds, the board has one single mission, and that is to ensure high quality audits. The laser focus is critical, and it's only possible because of the board's operational independence. So this is why you need to have this separation between the SEC and the Public Company Accounting Oversight Board, because the Public Company Accounting Oversight Board can focus specifically on the audits of these companies, whereas the SEC, as we know, has a vast portfolio of different things that they need to take their attention towards. So one of the most concerning risks is losing audit oversight for overseas companies listed on the U.S. stock exchange. So we have a lot of companies that are listed on the U.S. stock exchange from China, from South America, from a bunch of other countries that need to have oversight when it comes to auditing. And that is where the Public Company Accounting Oversight Board comes in. Under formal cooperative agreements with many foreign regulators, the Public Company Accounting Oversight Board has conducted inspections in over 50 international jurisdictions, including China, where in 2022 it secured unprecedented access. So recently, the Public Company Accounting Oversight Board chairman resigned from her position as chair of the Public Company Accounting Oversight Board, and this was a result of being pushed out by the head of the SEC. So let's take a look at a video now from the chair of the SEC and the head of the Public Company Accounting Oversight Board, so we get a general idea of who these people are and what their stance is on this issue. So this is Erica Williams, and she is the chair of the Public Company Accounting Oversight Board, and her last day with the board was on July 22nd because she was asked to resign by the chair of the SEC, Paul Atkins. So she was forced to resign from the Public Company Accounting Oversight Board. And here, Erica is going to explain the importance of the Public Company Accounting Oversight Board, especially when it comes to foreign companies that are traded on the U.S. Stock Exchange, and the importance of the Public Company Accounting Oversight Board. If we take a step back and think about how we got here, the PCAOB is 20 years old, and we've been able to inspect and investigate audit firms in 50 jurisdictions around the world, but we hadn't been able to inspect and investigate in China until Congress in 2020 passed the Holding Foreign Companies Accountable Act, which gave us for the first time leverage to be able to inspect and investigate in China and Hong Kong. And today we released reports that show the results of our inspections from last year. And as you know, we did uncover a number of deficiencies, and it is an opportunity now for us to hold firms accountable to fix those problems. So as we heard from Erica here, when she was talking about the ability of the Public Company Accounting Oversight Board to go into China, to go into Hong Kong, and to audit these firms that are traded on the US stock exchange. And that's something that is only granted to the Public Company Accounting Oversight Board. You can imagine that China wouldn't just allow anybody to come in and take a look at their company financials, especially a US entity. So the PCAOB, being independent of the SEC, basically gave them this privilege to be allowed into these other countries to audit these companies and make sure that what they are reporting on their financials is accurate. And as we heard from Erica in her interview here, they uncovered a number of deficiencies when it came to China specifically as a result of their investigations. So just giving credence to the importance of the Public Company Accounting Oversight Board when it comes to not only the companies within the US, but the companies that are outside of the US as well. So Erica had to resign from her position as chair of the Public Company Accounting Oversight Board as a result of Paul Atkins, who is the chair of the SEC, requesting that she resign from her position. Now, this is Paul Atkins testifying before the Appropriations Committee, basically speaking on the PCAOB being dismantled and folded into the SEC. Let's see what he has to say about this topic.
Mr. Chairman, good to see you again. At your confirmation hearing, you and I discussed the issue of the Public Company Accounting Oversight Board, the PCAOB, which was formed, as you know, after some major companies like Enron failed after cooking their books, and none of their auditors stopped in to correct the issues. And Enron's failure alone cost its shareholders about $67 billion. So Congress created the PCAOB.
So $67 billion that it cost various shareholders and people who are working for these companies and had their IRAs and they were invested in these company stocks. It ended up costing $67 billion.
In effect, to audit the auditors and make sure they stop fraud companies they audit before we have catastrophic failures like we witnessed in the Enron case. When you and I talked about this before in the Banking and Housing Committee, you agreed that the function played by the PCAOB was essential. Is that still the case?
Yes, sir.
Yeah. So one of the reasons I raised it then was I was concerned about efforts to fold the PCAOB into the SEC because of concerns that it would lose its punch and its ability to do the job. The House Reconciliation Bill, as you know, does fold the PCAOB into the SEC. I think that it will fail under the Byrd Rule, but I want to talk for a moment about the merits of that proposal. Because my understanding from the SEC itself is that, at least as of last month, the SEC does not have the personnel with the experience conducting those in-depth examinations or inspections of registered public accounting firms. That's based on information from the Office of the Chief Accountant. Do you have any reason to think otherwise?
So the SEC, like I mentioned, isn't specialized in auditing accounting firms. They have various other responsibilities that they need to take care of. That's why the PCAOB is centrally focused on auditing public accounting firms, and they have people in their positions, in their staff, that are experts in the field in order to make sure that these companies are operating appropriately, whereas the SEC does not have these resources available to them currently. They've been struggling with a staffing shortage, with a budget shortage. So that's what they're talking about here.
No, because we don't have that function. But if we get if it's folded into the SEC and we get the funding, we could take over that function using the examiners, I would imagine, from the PCAOB and not miss a beat.
Well, I want to press you a little bit on that, Mr. Chairman. How many of the 600 PCAOB employees does the SEC plan to hire to keep this important function going?
Well, we haven't done any study on that yet. But
you say very easily that you could absorb them. That obviously requires additional funding, does it not?
Exactly. And the way I understand it, that funding is contemplated by the
Well, so it's interesting you say that because the PCAOB right now is funded by a firm, a fee on the firms it oversees, right?
well, and also in public companies, there's basically
Right.
a wealth tax on companies.
But it's a fee. It's a fee-generated revenue. Right?
That the SEC approves. And,
Yes.
right.
But the reconciliation bill, Mr. Chairman, eliminates that authority. It eliminates the authority of the PCAOB. I mean, it eliminates the PCAOB. It folds it in the SEC. It does not include the authority to raise have fee-based revenue. Were you aware of that?
So, as I mentioned, the PCAOB is funded by publicly traded companies and the fees that those companies pay to the PCAOB, as well as independent auditing firms that pay the PCAOB in order to keep it in operation. The SEC is funded by who? The federal taxpayers. So, the taxpayers fund the SEC. So, if you're going to fold the PCAOB into the SEC, who's going to take the burden of these additional costs? It's going to be the taxpayer. So instead of charging these corporations on a yearly basis and charging these auditing firms in order to have compliance within the industry, now you're going to be putting that burden on the taxpayers in order to make sure that this happens. And as they mentioned here, the PCAOB currently employs 600 individuals. So that's 600 people who are solely focused on ensuring that these publicly traded companies are disclosing everything that they need to disclose and that their financial statements are in order. Now, the SEC is not going to be employing all 600 of those people from the PCAOB. It's definitely not going to happen. I don't even know if 10% of the people from the PCAOB will end up in the SEC. So this is a very important question that they bring up.
Yes, but what I understand is that there is contemplated funding for that, and built into our budget, we do have, since it's an even budget from last year, when you account for people who have left voluntarily from the SEC, we have about $100 million or so that could help tide it over.
Right.
I think.
Are you aware of what the current PCAOB budget is?
It's perhaps 400. I don't.
Yeah. No, you got it. You got it right. It's 400 million. You've got 100 million in your budget. That's a $300 million gap.
So there you go, right there. The PCAOB gets about $400 million a year in order to operate. And the SEC, Paul Atkins, the chair, just said we have about $100 million right now budgeted for the same activities that the PCAOB is doing with $400 million. So that's a $300 million discrepancy, which will be covered by who? The taxpayers? By who's going to be covering that $300 million?
If you want to maintain, in my view, the same functionality, which is something that I think all of us should be very interested in, not just with respect to U.S. companies, but as you and I discussed, Senator Kennedy and I passed legislation to make sure that companies based in China that are publicly listed on U.S. exchanges are subject to this audit procedure. I assume you think that's a good thing, that they're subject to that.
Well, I think the functions of the PCAOB are vital, as we spoke of before, and should that be folded into us, we'll be back to you all to for the proper resources to carry it forward, so we won't miss a beat on that.
I'm just saying, Mr. Chairman, it's pretty clear that the resources are not there in this budget if it gets folded in. I mean, as you pointed out, you've got 100 million extras. We're both pointing out the current budget is 400 million. So unless you really think you can fire or get rid of a lot of people and still do the job, we have an issue here. But I'm in my view, when something is not broken, we shouldn't try to come up with a different fix. If there are reforms to the PCAOB that you recommend, maybe that would be a better route to take if we want to make sure that they continue to have the capacity to oversee companies in China and elsewhere. I would also just point out in closing, Mr. Chairman, that a number of other countries have raised concerns about this contemplated change in the House because their agreements, their audit agreements are with the PCAOB, and they point out that it is not a U.S. government entity, right? It's a separate independent entity. And as soon as that role is taken over by a more of a government entity, all those agreements will need to be renegotiated.
So this last point here is a very important point to be aware of because the independence of the PCAOB, the separation of the PCAOB from the SEC is what allowed the PCAOB to go into these other countries, such as China, and do these independent audits. Basically, these countries, China has been in the news a lot now, and there's conflicts between China, tariffs, and the US, and all these different issues that are going on now. Um, if you're going to now fold the PCAOB into the SEC, now you are asking for China to allow a US government entity such as the SEC to come in and look at their financial statements, a non-independent party that is part of the US government, to be allowed to go in and look at the financial statements of these companies. A lot of these countries are not going to be on board with this. So there will need to be a complete revamp or renegotiation of what these companies are going to allow the US to do when it comes to these independent audits, if the PCAOB is now folded into the SEC. So we have issues when it comes to how are they going to be funding these resources with the SEC, seeing as these public companies are not going to be supporting the functions of the PCAOB anymore. The staffing resources that are going to be needed, 600 people who work for the PCAOB, what's going to happen to those people? How many people are now going to be designated to this responsibility of oversight when it comes to these publicly traded companies? So these are a lot of important questions that, Paul Atkins didn't really seem to quite have an answer to. So this brings into question a lot of uncertainty when it comes to the future of the financial markets, and what is the reasoning behind why they want to dismantle the PCAOB when it hasn't done anything wrong. It's not taking taxpayer money. It's funded independently. It has only proven to fortify and ensure the investors' credibility in the financial markets. And what is the reasoning? You have 20 years of positive experience when it comes to the PCAOB, and now all of a sudden you're saying we want to dismantle this this entity when it has only done good for the financial markets as a whole, theoretically. Um, and it was put into place in order to protect the investors' interest, and to protect people who are in the markets, and to ensure that these companies don't commit financial fraud. So are we opening the door to financial fraud? Is that the reasoning behind why they want to do this? Do they want to allow certain things to take place without having an independent body looking over their shoulder and saying, hey, why did you guys do that? Why did you do that? Now it's going to be managed just by the US government, the SEC, and they can do what they want. Maybe allowing certain countries to get by with less scrutiny when it comes to their financials. So these are some very important questions that Paul Atkins didn't seem to have quite the answers to, and it's something that we should ask ourselves as to why they are pushing for this to happen when it comes to rolling the PCAOB into the SEC. Continuing on with our article here from the New York Times, the PCAOB has conducted inspections in over 50 international jurisdictions, including China, where in 2022 it secured unprecedented access. This may not survive a transfer to the SEC, which is a government agency, because the Chinese regulators have historically rejected direct involvement from other governments. Why would you allow a different country, another government, to come into your country and audit the companies that are operating within your country. I don't know many countries that would allow people to do that. And yet the PCAOB was allowed this access because of its independence. Without a non-governmental alternative like the PCAOB, oversight would be likely have to be renegotiated from scratch and most likely lost entirely. The upshot would be a higher risk of frauds like the Luckin Coffee, a Chinese company that fabricated approximately $310 million in sales and cost investors billions after listing on the US exchange in 2019. So we have a history of these Chinese companies committing fraud, basically, listing on the US stock exchange and costing investors billions of dollars after they were found to have fraudulent financial activities. And now what you're saying is we want to dismantle the one entity that is responsible for ensuring the safety of the investors, folded up into the SEC, and likely now have no visibility or oversight when it comes to these international companies and these Chinese companies that are listed on the US stock exchange, exposing investors to extraordinarily high risks when it comes to their investments, their 401ks, so on and so forth. Systematic risks metastasize in regulatory gaps. The United States learned this after the free market fever in the late 1990s and early 2000s when Congress deregulated the telecom, energy, and financial sectors, including the repealing the Glass-Steagall Act and exempting derivatives from oversight. The rollback of these essential guardrails contributed to the downfall of WorldCom and Enron, as well as the 2008 financial crisis. So we implemented these measures as a result of some catastrophic failures in the financial industry, leading to a huge financial crisis in 2008 and the downfall of two of the biggest companies on the US stock exchange, who were touted as being, extraordinary companies led by amazing CEOs, when in reality it was all just a fraud. Since then, technological risks and the complexity of financial markets and reporting have only grown, yet Congress is now considering barring states from regulating artificial intelligence for 10 years, despite knowing very little about AI, how AI tools might be used. It's highly likely that AI will dominate audit procedures and public company financial statement preparation in the near future. Accounting oversight has never been more needed. So we are in an age right now where AI is taking over. We've seen it with the huge job cuts that we've had with companies like Microsoft investing billions of dollars into AI and cutting jobs. And, this is an uncertain future. And now more than ever, we need these financial oversights, yet they are talking about dismantling the PCAOB. So it really brings into question why they're trying to do this. The proposed bureaucratic consideration purports to save taxpayer dollars. This is merely wishful thinking or creative accounting. The PCAOB is funded by fees from public companies and registered brokers and dealers, not taxes. So the PCAOB is not funded by the individual taxpayer, but the SEC is. So all these all this funding will now need to be taken from the U.S. taxpayer, whereas before it didn't have to be. Transferring its duties to the SEC would only shift these costs to the public. And taking on yet another job couldn't come at a worse time for the SEC, which reportedly lost 16% of its staff in the past year, mostly because the Department of Government Efficiency related buyouts. To continue the board's work, the SEC would effectively need to rebuild it, but it doesn't have the resources to do so. So, I mean, really, the timing is extremely questionable. You have a 16% drop in the amount of staff in the SEC. You have a lack of budgetary funding, and you're talking about dismantling the PCAOB, which isn't even funded by the taxpayers. So it really brings into question what the reasoning is. Representatives once said, "We often think of money as currency of free market system, but in truth, the system rises and falls on the confidence of investors." So without the confidence of investors in the financial statements of these companies and what they're reporting in their financials, uh, that uh, basically hinders the credibility when it comes to how much these investors are going to be willing to invest into the stock market. Trust is hard won and easily lost. The PCAO was built to protect it, but if it's allowed to erode, we will all pay the price from market volatility. Higher borrowing costs and potentially taxpayer-funded cleanup efforts. The silent, immeasurable value of well-designed safeguards lies in the scandals they prevent from happening. So this is a very important issue here that I don't think is being talked about enough. It's kind of being swept under the rug, and main media coverage isn't really covering the topic. So it brings into question, why are they doing this secretly? What are the intentions behind what they want to do here with the folding of the PCAOB into the SEC? I'm really curious to hear what you guys have to say in the comments down below in relation to this topic. Hopefully, I did a good job in covering it and bringing to light some things that maybe you were not aware of when it comes to this issue with the PCAOB and the SEC. Let me know what you guys feel is going on behind the scenes here and the reasoning behind why they would want to do this. It seems strange that Paul Atkins didn't really have answers when it came to the subcommittee questionnaires, and forcing Erica out of the chair as the PCAOB chair, forcing her out, making her resign. These are all some suspicious activities, in my opinion, when you have an entity like the PCAOB that has only done good for investors and the accounting profession and the financial markets as a whole over the last 20 odd years. So let me know what you guys think in the comments down below. I'm curious to hear what you guys think. If you found this video helpful, informative, and you enjoyed it, please make sure to hit that subscribe button for future videos. I hope to see you guys in the next one. Thanks for watching.